Investing in international markets. Where to begin? Hey everyone, and welcome back to X100%, the channel where we explore strategies to amplify your financial growth. I'm your host, Eddie, and today we're embarking on a journey beyond our borders, diving into the exciting world of international investing. Think about it. Your favorite smartphone, the coffee you're sipping, even the clothes you're wearing. Chances are, they're the result of a global network of businesses. And that global network represents a vast landscape of investment opportunities, many of which you might be missing out on if you're only focusing on your home market. In this episode, we'll uncover the potential rewards of investing internationally, explore the risks involved, and, most importantly, provide you with a practical roadmap to get started. We'll cover everything from understanding different market types to choosing the right investment vehicles for your needs. So, buckle up, because we're about to expand your investment horizons. Let's start with the why. Why should you even consider investing outside your own country? Well, let me tell you a story. Imagine a small tech startup in South Korea developing cutting-edge battery technology. They started small, but their innovation quickly caught the attention of global automakers. As demand for electric vehicles soared, this company's stock price skyrocketed. Investors who recognized this potential early on, even those outside of South Korea, saw incredible returns. This illustrates a key benefit of international investing: access to growth opportunities you simply won't find at home. Emerging markets, in particular, are often characterized by rapid economic development, a growing middle class, and technological leaps. But it's not just about chasing high growth. International investing is also crucial for diversification. You've heard the saying, don't put all your eggs in one basket. Well, the same applies to your investment portfolio. By spreading your investments across different countries and economies, you reduce your overall risk. If one market underperforms, your investments in other markets can help cushion the blow. Now, before you rush off to buy shares in that hypothetical Korean battery company, let's talk about the risks. Because, let's be honest, international investing isn't a guaranteed path to riches. There are unique challenges to consider. Imagine another scenario: an investor puts a significant amount of money into a promising agricultural company in a politically unstable country. Suddenly, a coup occurs, the government is overthrown, and the company's assets are seized. The investor loses everything. This highlights the very real threat of political risk. Changes in government, regulations, or even social unrest can significantly impact your investments. Then there's currency risk. Fluctuations in exchange rates can erode your returns even if the underlying investment performs well. If you invest in a company whose currency weakens against your own, your profits will be worth less when you convert them back. Economic risk is another factor. Different countries are at different stages of their economic cycles. While one market might be booming, another might be in recession. And finally, there's regulatory and information risk. Some international markets have less stringent regulations and less transparent reporting requirements, making it harder to get accurate information about the companies you're investing in. So, how do you navigate this complex landscape? Where do you even begin? Well, it all starts with a bit of self-reflection. Step 1 is assessing your own risk tolerance, investment goals, and time horizon. Are you comfortable with higher levels of risk in pursuit of potentially higher returns? Or are you more focused on preserving capital? How long do you plan to hold your investments? Step 2 is research. You need to understand the different types of international markets. Developed markets, like those in Europe, Japan, and Australia, tend to be more stable and mature, but with potentially lower growth rates. Emerging markets, like Brazil, Russia, India, China, and South Africa, the BRICS countries, offer higher growth potential but also come with increased risk. And then there are frontier markets, which are even less developed and more volatile but can offer significant returns for the truly adventurous investor. Step 3 is choosing your investment vehicles. You don't necessarily have to buy individual stocks in foreign companies. In fact, for most beginners, that's not recommended. Instead, consider international ETFs, exchange-traded funds, or mutual funds. These funds hold a basket of stocks from various international companies, providing instant diversification. Another option is ADRs, American Depository Receipts, which are certificates that represent shares of foreign companies and trade on U.S. stock exchanges. Direct stock purchases are an option, but generally best left to experienced investors with a deep understanding of the specific market and company. Step 4, and this is crucial, is to consider a phased approach. Don't jump in all at once. Start small, perhaps with a single international ETF, and gradually increase your exposure as you gain experience and confidence. To help you on your journey, there are plenty of tools and resources available. Reputable financial news sources like Bloomberg, Reuters, and the Financial Times provide in-depth coverage of global markets. Many online brokerage platforms offer international investing options, often with research tools and educational resources. Websites like MSCI and FTSE Russell provide data and indices for tracking international market performance. And finally, While I'm providing you with information and insights, remember that this is not financial advice. It's always a good idea to consult with a qualified financial advisor who can help you develop a personalized investment strategy based on your individual circumstances. All right, let's take a moment to recap what we've learned today. We started by exploring the compelling reasons why international investing deserves a place in your portfolio. We talked about the potential for higher growth, especially in emerging markets, and the crucial role of diversification in reducing risk. Then we acknowledged the inherent risks. We discussed political instability, currency fluctuations, differing economic cycles, and the challenges of navigating regulations and information access in foreign markets. Remember that story about the agricultural company? It serves as a potent reminder to always do your due diligence. We then laid out a practical, step-by-step approach to getting started. We emphasized the importance of self-assessment, understanding your risk tolerance and investment goals. We explored the different types of international markets, from developed to emerging to frontier. And we discussed various investment vehicles, highlighting the benefits of ETFs and mutual funds for beginners. We also stressed the wisdom of a phased approach, starting small and gradually increasing your exposure. Finally, we touched on the wealth of resources available to help you research and make informed decisions. Remember, knowledge is power, especially when it comes to investing. Continuously educate yourself, stay informed about global events, and don't be afraid to seek expert advice. So, there you have it, a comprehensive introduction to the world of international investing. It's a vast and complex landscape, but one that holds immense potential for those willing to explore it. Remember, the key is to start small, stay informed, and be patient. Investing internationally isn't about getting rich quick. It's about building a well-diversified portfolio that can weather market storms and potentially deliver strong long-term returns. It's about expanding your horizons and participating in the growth of the global economy. That's all for today's episode of X100%. I hope you found this deep dive into international investing helpful and empowering. If you did, please hit that like button, subscribe to the channel for more financial insights, and leave a comment below. I'd love to hear your thoughts and questions. Next time, we'll be tackling bull and bear markets, how to navigate market cycles. So make sure you're subscribed so you don't miss it. Thanks for tuning in, everyone. I'm Eddie, and I'll see you in the next episode. Remember to always invest wisely and keep striving for that X100% growth.